In this video, we're going to walk through an income statement and look at what each line item is and why it's important, and how can we use it to make investment decisions. In this example, we're going to use the annual statements of Nike. Now keep in mind here that each of these numbers are in thousands. You can see that right here. So look here, and that number that looks like 34 million, well, it's actually 34 billion. Also note how these time periods are ordered. This one here is 2017, and over here is 2015. So we are moving right to left. So the first thing I notice here is that apparently Nike's fiscal year ends on May 31st. That means that the income statement reflects the performance of Nike from June 1st through May 31st. So let's get started. In 2017, Nike had $34.35 billion in revenue. Revenue is how much Nike earned before any expenses. My question here is, how does it look compared to last year? Well, they had 32.37 last year, which is a gain of about 6%. And before that, there was a gain of about 5.8%. So we're seeing some good annual growth over the past few years. That's good to know. Cost of revenue. You might also see it called cost of goods sold, or COGS. This is the cost directly related to the production of the products being sold. This includes material, shipping, things like that. Anything directly related to the creation of a product. Now, when we compare this $19 billion cost of goods sold to the revenue of 34.35, we can calculate that the cost of revenue is about 55% of revenue. If we do the same math for 2016 and 2015, we see that cost of revenue relative to sales has been fairly consistent. This is a good thing. It should be consistent. This gross profit of 15.3 is what you get when you subtract the 19 from the 34. If we keep comparing these numbers to revenue, we see that this 15 is about 45% of revenue. This is what they call gross profit margin. If we were doing a full analysis of Nike, we would compare this profit margin to other companies to see how they came in. The higher this gross profit margin, the better. Now on to operating expenses. The first one up, research and development. Research and development are tied to improving the existing products or creating new ones. Now, I got these financials from Yahoo Finance. I know that they have standard categories that they automatically pull down from company filings. I thought it was a bit strange that Nike didn't have any expenses for research and development. How do they develop new products? And this brings me to a different point. In financial reports, 10K, 10Q, things like that, companies have footnotes which explain in more details each line item and how they apply it. So I went and looked at Nike's 10K, and this is what I found. They group research and development in with cost of sales, which is up here. Now for this walkthrough, this isn't terribly important, but if we were comparing Nike to a competitor, we'd want to know how that competitor classified research and development, so we could be sure that the ratios could be properly compared to each other. Okay, on to selling, general, and administrative, often called SG&A. SG&A are expenses related both directly and indirectly to administrative costs. Administrative costs includes rents, buildings, insurance, salaries, people not tied to sales. Think of corporate headquarters and things like that. Selling is marketing, advertising, sponsorships on things like the Olympics or professional athletes. Nike is showing nothing here for non-recurring expenses. Non-recurring items would be items that are not expected to continue to happen. It might be something like an asset impairment, or if a business or part of a business is sold, or something like that. This is very similar to extraordinary items down here. If there was a non-recurring item, then Nike would have to disclose what it is in the footnotes. In our case, it doesn't matter much. Now this might be important if you had a situation where some expenses or revenue kept appearing over and over in extraordinary items or non-recurring revenue. If that was the case, then you could determine perhaps you should adjust it or move it from non-recurring to operating. Something like that, whatever's most appropriate for the situation. Okay, moving on. Expenses that don't fall into one of these other categories sometimes would fall into the other category. If there was something here, I would go over to the footnotes and find out what it is. Okay, on to total operating expenses. I don't know why they don't have anything here. I would have thought it would have been the sum of these numbers, which should make it 10,563. Either way, you end up with the operating income line. Once again, I like comparing this to revenue, and this is what we get for ratios. This one is called operating margin. So it looks like Nike's operating margins has been fairly consistent over the past few years. Now onto this section. This is the income and expenses from continuing operations. This first one is other, which could be a lot of things. Since there was a number of 196, I went to the footnotes and found this. Basically, it says that in this case, this is a gain or loss based on currency conversions. This, earnings before interest and tax, often called EBIT, this should probably be colored differently since it's simply another subtotal. Now on to interest expense. Nike isn't showing anything here, but this is the interest the company would pay for bonds or loans or lines of credit, things like that. This is an important line item because if Nike were to borrow a ton of money, in theory this would move higher and higher, and if there was a pullback in earnings or EBIT fell, then the question would be, could Nike afford to keep paying the interest that they owe on their bonds? Luckily for Nike, this doesn't seem to apply here, but I just want to point that out. Moving down here, another subtotal amount, earnings before tax. It's the same number as last time since they show no interest expense. This here, this is their income tax expense. This is the line item that would be affected by the recent tax cuts in the United States. But since Nike is an international company, this number here of $646 million, this is a net number. This is how much they paid in taxes worldwide. That's important to note because you can't just assume that this will be lower thanks to new tax rates. It probably will be lower, but we don't know how much until we know how much business they do in the United States and how much they do abroad. To determine that, we're going to have to take a closer look at their financial statements, footnotes. Now on to minority interest. Minority interest. This is when a company owns less than 50% of a business. So if Nike owns, let's say, 10% of Adidas, which is traded on a German stock exchange, and Adidas pays dividends to Nike on the 10% that Nike owns, those dividends would appear right here. This brings us to net income from continuing operations. In this case, it's the same as net income, which is the profit of the firm. Now, if there were any one-time items, like Nike sold their Canadian division or something like that, then they would break those numbers out into these categories. Moving down here to effects on accounting changes. Effects on accounting changes happen when the company adopts either a new accounting rule or changes to a different version of the rule. Once again, if there was anything here we want to know the details for, we would check the footnotes. Now, Nike doesn't have any preferred shares, but if they did, we would see it here. This is important because net income is supposed to be what's available to common shareholders. If you own Nike bonds, you care about this line item. And if you own Nike preferreds, you would care about this line item. But if you own the common shares, everyday stock, then this is the profit that the company may use to either reinvest, in theory to grow the business, or pay dividends or buy back stock. So that wraps up the income statement. In our next video, we're going to walk through the balance sheet. If you have any questions about the world of investing, any suggestions on videos, please post in the comments below, and please subscribe as we continue to update with new videos every week. Thank you.